Good morning and welcome back to Dark Gamma Pre-Market Analysis. It is Monday, May 12th, and we are coming in with a slightly bearish open on the SP 500, sitting at 7,390.7, down about 22 points from Friday's close of 7,412.84. That is a gap down of roughly 30 basis points before the bell, so we are already testing the lower bound of what this market wants to do today. The tone is cautious but not panicked, and that distinction is going to matter a lot as we work through the session.
Right, Samantha. And that gap context is important. We are opening right near the lower edge of the expected move, which Dark Gamma has bracketed between 7,381 on the downside and 7,444.6 on the upside. So essentially, the market is gapping directly into the floor of that range. Bulls need to defend this level early, or we risk seeing follow-through selling pressure push us toward the mid-sevens handle.
And let's bring in Max Pain here because it adds a critical layer to the picture. Max Pain is sitting at 7,270. That is more than 120 points below current price. That kind of spread tells us options market makers have significant room to let this thing drift lower before any structural support kicks in from a gamma perspective. We are not at a point where dealers are naturally compelled to defend price. So the path of least resistance, at least through options mechanics, continues to lean softer.
On the sector side, the story is pretty divided this morning. Energy is the clear standout, up over 1%, which suggests some rotation into hard assets and commodity plays, possibly a macro hedge. But on the other end, communications is getting hit hard, down nearly 3%. That is a significant drag, and when you layer that on top of the Magnificent Seven all trading in the red, Tesla leading the losses down over 1.3%, Google close behind at nearly 1%, you can see why the ESP 500 is struggling to hold its footing.
Exactly, and that Magnificent Seven weakness is not trivial. These names carry enormous index weight, and when all seven are flashing red simultaneously in pre-market, it compresses the ceiling for any bounce attempt. Microsoft and Meta are both down roughly 40 basis points. Amazon and Nvidia each down 80 basis points. Even Apple, usually the steadier hand in the group, is negative. There is no obvious hiding spot within mega cap tech this morning.
So how do we frame the trading day? Watch that 7,381 level closely. It is the low end of the expected move and a key near-term reference. A clean hold there opens the door towards 7,400 and potentially a fill of the gap. A break below it shifts the narrative, and the next meaningful gravitational pull from Dark Gamma's gamma exposure model points us back toward that 7,270 max pain zone over time.
Well said, Billy. Bottom line for the Dark Gamma community this morning: gap down into the expected move floor, Magnificent Seven uniformly weak, communications dragging the tape, and energy the lone bright spot. The option structure gives sellers room to work. Stay disciplined with your levels. Watch implied volatility for any spike that changes the hedging dynamic. And as always, let the data lead. We will be back with updates as the session develops. Stay sharp out there. On today's macro calendar, the main event is NFIB Optimism Index at 6:00 a.m., consensus 96.2, previous 95.8. Additionally, one Fed speaker is scheduled today.
There are 4 more events during the session. These releases could drive volatility at the S&P 500 open.
Across the board, the Magnificent Seven are trading in the red pre-market, with losses ranging from around 0.2% all the way to 1.33%. So the tone heading into the open is clearly cautious for mega cap tech. It's a broad, uniform pullback rather than anything stock-specific, which tells us the pressure is macro in nature.
Apple is holding up the best of the group, down just 0.21%, while Tesla is taking the hardest hit at 1.33% lower. That's nearly double anyone else's decline and worth watching closely. Alphabet is also notably weak at down nearly 1%, suggesting some rotation away from the ad-driven names.
Economist David Rosenberg's comments about real wage compression despite a solid jobs report are likely feeding into this sentiment. Investors are digesting the idea that consumer spending power may be softer than the headline numbers suggest, and that weighs directly on the revenue outlooks for consumer-facing names like Amazon and Tesla. Nvidia and Amazon are both down 0.8%, which adds to the sense that growth expectations are being quietly trimmed.
Interestingly, Qnity Electronics beating first quarter targets and raising its full-year outlook is a small bright spot in the semiconductor and hardware space, though it hasn't been enough to lift Nvidia out of the red today. Overall, the Magnificent Seven are signaling a defensive open for the broader tech sector, so traders should watch whether these losses deepen or stabilize once the cash session begins. Before we continue with today's analysis, we have a quick message for you.
Don't go anywhere.
Want to see exactly what institutions are doing in the market in real time? Then this is for you. Exclusively for members of the Dark Gamma community, the SPX trading platform is currently in beta, and access is completely free until the official launch. Go to the link on screen, sign up, and in the discount field, enter the code shown on screen to also activate 1 free month on the institutional levels bot tool. From the platform, you will see the complete market X-ray, institutions trading live, liquidity zones, points of interest, unusual positioning, everything that moves the price of SPX visible on your screen in real time. No prior experience needed. Just get in, explore, and start seeing the market the way institutions see it, like you never have before. Take advantage of this access before it closes.
There's your invitation. I forgot to mention that both Billy and I are there with you in real time with our AI analysis of unusual positioning and other key metrics.
That's right. See you there. Now let's get into today's earnings.
Kicking things off this Tuesday morning, the heaviest name reporting pre-market is C Limited at $48 billion in market cap. Sitting in communication services with a beta of 1.46 and an expected move of 9.9%, that is a significant implied swing heading into the print. JD.com and Qnity Electronics are also on the tape this morning, rounding out a tech-heavy pre-market slate.
After the close tonight, Franco-Nevada leads the afternoon session at $45.8 billion in basic materials, though its beta of 0.65 and expected move of just 3.1% signal the options market is pricing in a relatively contained reaction. Nextracker and Oklo are the wilder cards tonight, with expected moves of 10.5 and 9.2% respectively given their elevated betas.
Shifting to tomorrow morning, Alibaba dominates the session at $317.1 billion in consumer cyclical, carrying a beta of 1.24 and an expected move of 5.2%. Given the size of that float, even a modest percentage move translates into enormous notional dollar displacement. Deutsche Telekom and Nabius Group also report pre-market, with Nabius drawing attention for its beta of 3.09 and a 9% expected move.
Tomorrow after the close, Cisco Systems is the anchor at nearly $390 billion in technology, with a contained beta of 0.91 but a notable expected move of 6.6% that will keep 0 days to expiration traders very active into that print. Manulife Financial and AES wrap the session, with AES carrying a minimal expected move of 0.8%, reflecting very low sensitivity to earnings surprises.
Qnity Electronics crushing Q1 targets and lifting full-year guidance could spark some real momentum in the tech sector at the open today. That kind of earnings beat tends to lift sentiment broadly, especially if traders are looking for confirmation that corporate earnings are holding up.
Agreed. But Rosenberg's wage commentary is the counterweight here. Real purchasing power erosion could keep consumer discretionary names under pressure even if the headline jobs number looked solid. Watch how the SP 500 handles its overnight levels, because gamma exposure near key strikes could amplify any early move in either direction.
The open interest stacked around the current range suggests market makers will be active in defending those levels, particularly with 0 days to expiration contracts increasingly used by traders to fade gap opens. A strong Qnity-led gap up could get faded hard if the macro wage story starts to dominate the narrative mid-morning.
The London political headline adds a wildcard layer, since any surprise policy signal from Mayor Burnham could move sterling and create ripple effects in multinational names at the open. I would watch the first 15 minutes closely before sizing into any directional trade today.
An initial public offering is when a private company sells shares to the public for the first time, listing on a stock exchange to raise capital.
So what companies are stepping into the spotlight today?
BW Industrials Holdings Incorporated is making its debut under the ticker BWGC on NYSE MKT, offering 2,625,000 shares priced between $6 and $7.
A modest offering size, but it could draw attention from traders looking for small cap momentum on day one.
Drilling into the strikes closest to spot on the SP 500 with spot sitting at 7,390, the 7,400 call is the nearest resistance level with 7,213 contracts of open interest, up 164.41% overnight. That is a massive single-day build, suggesting dealers are hedging fresh upside exposure right at the round number above us.
On the put side, the 7,300 strike is the closest support level with 8,389 contracts, and open interest there surged 297.21% day over day, signaling aggressive downside protection being added just 90 points beneath spot.
With max pain sitting at 7,270, the clustering of new open interest at 7,400 calls and 7,300 puts essentially bracket spot in a tight 90 to 10 point range, and the gamma exposure from those freshly printed contracts will likely act as a gravitational magnet, keeping price pinned or volatile around current levels.
The put-to-call ratios across all three near-term expirations are running above 2 to 1. Reinforcing a defensive posture from large players. So watch 7,300 as intraday support and 7,400 as the key resistance ceiling where call sellers will pressure any breakout attempt.
Breaking down the key levels for today's SP 500 0 days to expiration setup, the gamma flip sits at 7,268.9, which is the price where dealer hedging behavior flips from stabilizing the market to amplifying moves. Since spot is trading well above that level at 7,390.7, dealers are in positive gamma territory, meaning they sell rallies and buy dips to stay hedged.
The call wall at 7,420 is where the heaviest concentration of call open interest sits, creating a ceiling effect because dealers short those calls must sell the underlying as price approaches that level. The put wall at 7,380 acts as a floor with similar mechanics working in reverse, and notice spot is currently sandwiched just above that put wall.
That tight range between 7,380 and 7,420 is essentially the battleground for today's session, with gamma exposure from both walls compressing expected movement. A clean break below 7,380 could accelerate selling pressure as dealers unwind put hedges.
The open sets up cautiously bullish given spot holding above the put wall, but the call wall only 30 points higher limits meaningful upside unless volume forces a breakout through that level. Watch dealer re-hedging flow closely in the first 30 minutes as 0 days to expiration gamma exposure intensifies rapidly with every point of movement.
Tracking institutional footprints. The dominant liquidity level over the past year is unavailable.
These levels represent zones where the highest institutional liquidity has accumulated over the past year, making them key support and resistance areas for S&P 500.
Over the past week, the level with the highest active liquidity is the 7,370 level below current price, with maximum liquidity concentration over 3 sessions. Recent activity confirms strong institutional interest in this area.
When price approaches these levels, watch the market's reaction closely. These are zones where major players have left a significant liquidity footprint.
Here is the complete level map for today's session. S&P 500 is at 7,391, above the gamma flip at 7,269.
1 sigma range, 68% probability, goes from 7,381 to 7,445. 2 sigma, 95%, extends from 7,349 to 7,476.
On the GAX side, call wall sits at 7,420 structural resistance. Put wall at 7,380 is where dealers become forced buyers.
The top institutional whale levels nearby are... These are the highest liquidity concentrations in the market. Expect reactions there.
Breaking now from the Dark Gamma Institutional Scanner, 14 fresh entries flagged today, and the headline number is hard to ignore. Microchip technology, ticker MCHP, is absorbing the largest single block, $316 million in call premium at the $75 strike, expiring September 2026, with over 108,000 contracts of new open interest and an ask percentage of 99.8. That is nearly full ask, which tells you this flow was not passive.
That is the dominant print of the session by a wide margin, Samantha. Beyond MCHP, the semiconductor and tech complex is clearly where institutional money is concentrating. Nvidia calls at the $230 strike for June 2026 logged 18.69 million in premium and nearly 5,800 new contracts. Tesla at $495 also calls, June 2026, added 9.33 million and over 9,500 contracts. Wynn Resorts represents the only non-tech name in today's fresh entries, 28.62 million in call premium at the $90 strike, bringing some consumer discretionary exposure into the mix.
And the confirmed flow side is equally noteworthy. 3 previously detected contracts just cleared the plus 20% open interest threshold, meaning institutions added to existing positions. Rocket Lab RKLB is the outlier here, a 13.24 million put at the $90 strike for June 2026 with an ask percentage of 67.7. That is the only bearish positioning confirmed in today's full dataset. Netflix, meanwhile, is seeing dual confirmation. The $40 and $42 calls for January 2027 each show 68.90 new contracts, with ask prints of 96.6 and 73% respectively, totaling over 72 million in combined premium across both strikes.
So stepping back at the sector and positioning level, technology and semiconductors are capturing the overwhelming share of today's detected flow. Out of the 7 contracts on the board right now, 6 are calls and 1 is a put, making the directional tilt in this session heavily skewed to the upside. The RKLB put on Rocket Lab stands as the lone confirmed hedge or bearish structure in an otherwise call-dominated tape. Total premium across all entries clears $450 million, with MCHP alone accounting for roughly 70% of that figure. We will continue monitoring for additional confirmations throughout the session.
Breaking institutional flow alert here on Dark Gamma. Our scanner has detected a major new contract entry today on MCHP microchip technology. The position is a call contract with a strike of $75, expiring September 18, 2026. Total premium registered on this flow comes in at $316.2 million, making this one of the larger single entries our system has flagged in recent sessions.
That is a significant flow, Samantha. Breaking down the volume, our scanner registered 108,203 contracts at the moment of detection. The institutional average entry price on the premium side came in at $29.23 per contract. Open interest is currently sitting at 108,472 contracts, with 108,092 of those flagged as new, confirming this as a fresh institutional entry into the system today.
Now here is where the tracking setup becomes particularly noteworthy from a data standpoint, Billy. The current contract price is $26.45, which places it below the institutional average entry price of $29.23 per contract. In flow tracking methodology, when current premium sits at or below the documented institutional entry price, while open interest remains flat or continues to grow, that configuration is categorized by our system as an ideal tracking setup. Open interest here is holding at 108,472 contracts, consistent with that criteria.
And rounding out the data picture, Samantha, the underlying break-even price at expiration for this contract, based on the strike and the registered premium, is calculated at $104.20 on the underlying share price of MCHP by September 18, 26. That is the level the underlying would need to reach at expiration for the contract to be at break-even based on the recorded entry data. We will continue monitoring this position as part of our ongoing institutional flow coverage here on Dark Gamma.
If you want this level of market intelligence every single day, join Dark Gamma right now. Bots working for you, whale levels, real-time institutional positioning, opportunity scanners, and gamma exposure updated by the minute. You also get access to institutional liquidity and options levels for any ticker, ready to drop directly into your TradingView indicator. Exactly where institutions are positioning. No noise, just data. Dark Gamma is the edge that separates winning traders from the rest. The information that moves the market in your hands today. The link is in the description. Click it now. We'll see you on the inside.